Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of November 20th through November 24th, where we'll try to help you make money trading during Thanksgiving week. So let's get started. Good morning, and thank you for joining us, Brian Moritz, MD, The Crow. Thank you all for joining us in the live chat today. Hope you all are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for the week of November 20th through the 24th. We keep our notes for our weekly trading game plans in publicly accessible Google documents, and you can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus video, links to the tools and resources we use to do our market analysis and strategies for this trading week. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as our weekly trading game plan notes from previous weeks in that Google Drive folder. And again, you can find a link to that Google Drive folder in the description box below. Welcome, Alan Krantz, Ricky Khan. Thank you also for joining us. Hope you all are doing well. So let's look at how the markets ended up on Friday. So we'll jump over to the main page of FinViz. You see pretty flat, down a little bit, and then up a little bit in the afternoon. Pretty much oscillating around, zero point. So not much movement on Friday. We did have almost 72% advancers versus 24% decliners. We got 70% new highs, 30% new lows. We've now got 66% above their 50-day moving average, 34% below, and we've got 45% above their 200-day moving average and 54% below. So although the indices didn't move a whole lot and it's showing a bearish sentiment, in my humble opinion, I believe that's primarily, again, as I've pointed out, I think the indices themselves are being driven by what they call the Magnificent Seven or Grade 8 or the mega cap tech companies, and they didn't generally move. They kind of oscillated. We saw some oscillation during the day. Saw a dip in Microsoft. Tesla kind of oscillated a bit, and Amazon was up a little bit. So even though, again, the indices didn't move a whole lot, we see some healthy extension in the breadth with more advancers and new highs, more above their 50-day. So again, a healthy broadening of the market, in my humble opinion. Welcome, Doug M., Gerald Fritz. Thank you also for joining us. So we see the news about SpaceX's Starship got off but explodes. See the CEO of ChatGPT left OpenAI, and that's part of the decline in Microsoft. Indices finished with weekly gains. Pretty quiet. Again, session quiet. We'll talk about the decrease in volatility going into Thanksgiving week. We'll see, we saw oil actually broke down below 75. It tested around the 70 range, then broke back above 75. Natural gas broke below 3, now trying to regain that $3 level. Gold had a nice run up towards 2,000, now kind of range bound between 1950 and 2,000. Probably going to retest that 2,000 level a couple times. And we see the futures on the indices pretty mixed, but again, pretty flat. Saw the dollar weaken. The last I saw, the DXY was actually below 104. So we see the euro surge. We saw the yen surge back up relative to the dollar. Saw also the treasury yields drop significantly. So we got down to the 4.4 level in the 10-year. See just a slight inversion between the 5 and 10s, but again, a dramatic decline in treasury yields. And we'll talk about what the CPI and PPI effects had on the bond market as well. Welcome, Ellen Krantz. Thank you also for joining us. Hope you're doing well. So we'll look at the indices quickly. Here's the SPY, and again, we'll talk numerous times about the exuberant reaction to the CPI, not such an exuberant reaction to the PPI, although as we'll point out, both of them were cooling. It shows inflation is slowly cooling, and again, the markets had a very exuberant reaction to that lower CPI number. Again, not so much to the PPI, and then some healthy, in my humble opinion, healthy consolidation for the remainder of the week. Again, jobless claims data was not overly negative. So again, we found the weekly, we see that exuberant rally based on the CPI, PPI, inflationary data through the week. Got good support from the moving average, approaching the previous high, testing that previous high. Again, nice uptrend. Look at the Qs, the NASDAQ. Again, on the weekly, very much the same. Again, testing the previous high, nice upward trend. The Dow, again, good support under the moving average, testing its previous highs. Got some more room to run up to test the longer term high. So again, healthy uptrend. The Russell, IWM, again, more of a engulfing bar, still below its longer term moving average, got resistance, so it got rejected from that moving average, so not as healthy. The Russell have to, push up and then retest that moving average some. So again, Russell not quite as healthy as the Dow, S&P, and NASDAQ. Look at the VIX, not much volatility. And last I saw, the VIX was actually in the 13s. So we see, dramatic decline after the CPI data, PPI data, dramatic decline in the VIX, and again downtrending towards the below the 14 level. So very low volatility. And again, we'll talk about Thanksgiving week tends to be lower volume. Could create some volatility due to the lower volume, but we don't expect any significant volatility this week either. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So let's look at the groups and the industries in FinBiz as well. So we saw a sector rotation again on Friday. We've seen this typically on Friday. They take the underperformers and rotate back into them. So energy, as we'll see, has been underperforming. We again saw a rotation back into energy. Oil prices bounced back up over 75. Got some financials, industrials, basic materials rebounded. Communication services and defensives and real estate were negative. And you can see those were some of the stronger segments for the week. Real estate, basic materials, utilities, and the weakest were energy and defensive. Again, for the month, energy's been very negative. The strongest for the month's been technology and consumer cyclical. Real estate's again been very strong. So again, on Fridays, we've seen that sector rotation out of the stronger sectors, profit taking out of the stronger sectors, rotation into the weaker sectors on Friday. So again, something to watch for, on a weekly basis. Industry-wide on Friday, some department stores reported good earnings. So we see department stores, some apparel. Again, this is earnings-based. We'll look at tomorrow in more detail on some of the retail ETFs, or today we may look at some of them as well. See, uranium's been strong. Oil and gas was strong on Friday, but generally weak for the week. Some REITs were positive. The negatives were gold and silver. Gold and silver had a nice run. Again, weakening dollar. Lower bond yields, but on Friday, again, probably some profit taking and some weakness in silver and gold and some of the real estate REITs on Friday. However, for the week, silver was strong, gold relatively strong, again, some retail. Uranium's been strong. And the weakest, we had, some poor reporting from some discount stores. So Walmart got hit. They beat on earnings and revenue, but their guidance was a little softer going forward, and that caused a decline in Walmart quite a bit. See, oil and gas was, generally weak for the week. Again, month retail uranium's been strong. And the weakest, again, was oil and gas and solar, silver and gold for the month were relatively weak. But again, we saw that rebound during this week, and then some profit taking, some slight decline on Friday. Again, uranium's been strong for the quarter, REITs, real estate. And the weakest, solar's been very poor. And again, oil and gas in general. Farm products, we talked about that as well, been weak for the quarter. Okay, I'll open up the economic data from last week and we'll talk through the economic data that we got last week. I'll point out some of the highlights and then we'll look at the economic data coming up for next week. Let me grab a quick drink. Okay, on Tuesday we got the CPI data, which was lighter, cooler than expected, so 0.2 versus 0.3 expected on a core month-to-month basis. Again, year to year, 4 versus 4.1. The overall CPI month on month was flat, so 0. And the year on year was a slightly 3.2 versus 3.3. So again, this shows that consumer inflation is slowly cooling off. So again, we saw a very positive, exuberant reaction from the markets based on this cooler CPI data. Real earnings was in line. Then on Wednesday, we got PPI data. And again, the core was flat and below expectations. So it's 0 versus 0.3 expectations, 2.4 year on year versus 2.7 expected. The month on month was actually negative. So this shows that producer inflation, producer prices are actually going down. So that bodes well for future CPI consumer data. So again, all very positive. We didn't see quite as an exuberant reaction to the PPI data. It's probably already baked into the exuberant reaction we saw on the CPI data on Tuesday. Again, we've seen bond yields coming down. So mortgage rates are now below 8%. Mortgage applications are up. So again, in my humble opinion, and again, we're not financial advisors. None of this should be considered financial advice. All of this is for education and entertainment purposes only, as is all of our content. And this is my opinions. But again, I believe that the drop in Treasury yields, the 10-year TLT, or the 10-year bond causing a drop in mortgage rates, we're going to see a little bit of a burst in home buying activity, given that the rates have been high and are expected to be high for a long time. So again, I think the new home sales, existing home sales is more supply constrained. But again, I think the housing data is going to be good in the very short term for the past couple weeks, and we won't get that for some period of time. Also, we got retail sales data was actually positive, expected to be negative. So again, bodes well for the retail sector going forward. So again, retail sales month on month was a little negative, but better than expected. And if you take out gas and auto, then it was actually positive, more so than expected. So again, retail sector's looking good so far. We'll hear, reports coming out of Black Friday, etc., and that will tell us something about the actual retail sales going for the holiday season. Welcome, Walter Lyons. Thank you for joining us. Glad to see you as well. Then Thursday, we got jobless claims data. As we've seen recently, the continuing claims is creeping up, but again, very slowly. So again, the pool of people looking is growing slowly, but the initial, it increased slightly, but again, not dramatically. So we're not seeing a strong increase in unemployment. The job market continues to be resilient. So again, the Fed doesn't have to be, afraid of dramatic increases in unemployment. And so they can, again, be a little bit more hawkish, although they've been, their messaging seems to be, they'll wait and see and hire for longer and data dependent, like we've been saying for quite some time. And that would be our expectation is they might hike, another 25 basis points in the future at some point, but not dramatic increases. Also, Friday was November options expiration date. I didn't really see, typically in the past, options expiration, the OPEX has caused increased volatility, but I haven't really seen that lately. So again, we're seeing this, very, very dramatic decrease in volatility in general. So very quickly look at the rest of the economic data from the past week. Got some, you can see the bill auctions don't look terrible. Talked about CPI here. Small business optimism was actually better than expected. So again, that bodes well for the economy. Again, we've got Fed officials speaking. Mesters tends to be more hawkish. I guess she's her voting tenure is expiring soon, I believe. Crude oil stocks was up, but less than expected. But again, we saw oil decline near 70 and then bounce back up over 75 again. Talked about retail sales and PPI. Again, crude oil inventories up. Gasoline inventories, though, declined. Talked about jobless claims. This was kind of interesting. Import and export prices dropped more than expected. So again, inflationary factors, not only in the U.S., but globally, should slowly cool off a little bit based on that. Capacity utilization is down. Production is down. So again, the economy's slowing but not, dramatically. Natural gas storage was actually down. And again, we saw a pretty dramatic collapse in the natural gas price. Now it dropped below 3. So building permits, again, up. Housing starts up, again, with the declining mortgage rates. I think people are going to take advantage of that. Here's a reversal as well, as rig counts actually went up. So we did have the higher oil. So the past several weeks, we've seen the rig count go down. It actually went up again. And so that will put downward pressure on oil. So again, oil probably going to kind of stabilize between 70 and 80, although I guess with the war, the Gaza war, there was a lot of speculation that oil was going to, surge much higher. When that didn't happen, I guess there was an unwind of longs and a lot of selling of those positions in oil, and speculated that caused part of the decline. So next week, we've got some bill auctions. Got some existing home sales. Again, existing home sales, I don't think we'll get a lot of a pop, maybe a little bit. But new home sales due to the lower mortgage rates, I think we'll get a short-term pop. Get continuing claims, jobless claims data on Wednesday. And then Thursday, we also get Michigan sentiment on Wednesday. So it's unusual to get that on Wednesday. So we're getting that, as well as oil inventories on Wednesday, natural gas on Wednesday. So Wednesday, a lot of the data is being reported on Wednesday as the markets are closed on Thursday. And we have a shortened day on Friday, so the markets close at 1 p.m. on Friday. So again, due to the shortened week, it looks like Wednesday, most of the economic data is being packed into Wednesday. So those traders that are still around this week, I would expect, again, most of the excitement will be on Wednesday, right before Thanksgiving. So we're still in the heat of earnings season. It's slowly coming to an end. Again, you can see who all's reporting earnings in the earnings tab in investing.com. Again, you can see who's coming up. We know NVIDIA, I believe, is coming up on the 21st. And that's something that everyone's watching to see how that impacts both the Magnificent Seven, the FANGs, large cap tech, as well as the semiconductor industry as a whole. See a smattering of other companies, other industries, etc. So you can look for anything that's of particular interest to you. See what sectors that's going to affect. Look for sympathy plays. We've been seeing, companies that miss on earnings or give poor guidance going forward are being severely punished. So it's definitely worth listening to the earnings and their guidance. Again, even if they beat on top line, bottom line, if they give weak guidance going forward, the chances are they're going to be punished severely right now. Just meeting or slightly beating, they're might be rewarded some, but it's more so on the downside than the upside right now. So again, reminder, Thursday markets are closed. Friday markets close at 1 p.m. Again, we'll talk about making money during Thanksgiving week, lighter volume, etc. Talked about earnings. Again, our more detailed recommendations about how to make money trading. Earnings reports is in this video. How to make money trading when earnings matter again. So we'd recommend that for, again, more detailed information about how we trade around earnings. Okay, let me grab a quick drink and we'll jump over to the market screen in Webull. Look at how the markets performed, ETFs, best performing industries in the market screen in Webull. Just a real quick reminder, if you're not already using Webull, you can still get at least 6 free stocks by opening and funding an account in Webull. We use Webull for our market analysis, our due diligence, the majority of our trading. You can see you also get 5% interest on your uninvested cash in Webull. So again, even on your idle cash, you can be making money trading with Webull. So again, we recommend we use the platform, and if you'd use our affiliate link in the description box below, you can get your free stocks. You can also help support our BeachBum trading community, which we greatly appreciate. This is the market screen of the online browser version of Webull. I like to use this for some of our market analysis. We can see the histogram of advancers and decliners. So we see, about better than 2-to-1 advancers to decliners. The advance was relatively small, a lot of unchanged, some small declines, very few major declines, a few major advancers. This is an interesting crossover. So we saw this crossover, the NYSE, and a major, inflow. Looks like about 10:40, 10:30, there was this surge of inflow into the NYSE, outflow out of the NASDAQ. So again, we see that rotation. Monday or on Fridays, we have a tendency to see some profit taking, some money flowing out of the NASDAQ into the NYSE. So that's always interesting. Again, you can see a near-term calendar of the upcoming earnings, who's reporting in the very near term by hitting the earnings section and the calendar section in Webull. So again, a good way to see who's coming up soon, whether it's before market open, after market close. We'll look at the best performing industries for the week. Again, uranium's been very strong. The REITs have been, relatively strong for the week. Energy, XLE in general, although solar, they rebound solar, although the longer term trend's very negative. Got some auto parts positive. Utilities was positive. Construction, I guess Home Depot did okay. Banking, investment. Biotech just slightly positive. Again, utilities positive. Metals and mining, basic materials positive. So, in general, most sectors were positive for the week. Look at the most popular ETFs. So market-wise, so up on the Russell, small cap. Up on Europe, mid cap. Up on the Dow. So mid caps, looks like, mid cap, small caps. So they're focusing more in the S&P on mid cap, small caps again. Those were a little bit weaker last week. Yen positive. Again, it bottomed and rebounded. The euro bottomed and rebounded. Again, short the VIX. Tend, it's definitely a downtrend in the VIX volatility. Russell, again, up on the Russell, small cap. Again, Europe, China, up. I saw Crow has been talking. We'll look at the China ETFs, was commenting that the yin-yang pair has been some of his best performing ETF trades. Again, we saw quite a bit of volatility around the Xi meeting, pop going into it, and then a decline. We got Baba reported poor earnings. They're not spinning off their cloud sector, and that caused the yen to decline, yang to go up. So the China tech ETFs declined late in the week, in part due to that Baba news. So again, NASDAQ, although that's interesting, short the NASDAQ. So we've got a mixture of the NASDAQ, long and short. So again, much more of a tug of war on the NASDAQ than the other indices. So in terms of industries, industrials, almost everything positive. Communication services a little weak. Some negativity in healthcare. Again, everything else, basic materials very strong. A little negative in technology, and negative in consumer defensive. So again, more of a risk on through the week. Real estate kind of mixed. Financial services positive. Commodities, we've got carbon, oil. So again, Friday, oil saw a rebound. Gas had a rebound. Again, rebound in oil and gas. And then for bonds, we've got some municipal. So people are diversifying into municipal, long end, 25-year plus, international. So again, we're seeing some diversification in bonds, more long end going into municipals, international. And again, that's in part because the treasury yields declined. Saw all the foreign currencies pretty much rebounded against the dollar. Again, DXY dropped below 104. So again, that's a positive tailwind for dollar denominated commodities. So if we look at futures, welcome Sydney Osborne. Thank you for joining us. Hope you're doing well. So again, the futures show, that exuberant run after the CPI, PPI not quite so much, but again positive. And we see consolidation. So we're seeing that in all the futures for all the indices, that exuberant run and consolidation. So the Dow, broke out previously, hasn't quite reached that previous high. S&P's got a little bit of room. Again, for it to reach its previous high. NASDAQ definitely has broken out. So again, that might justify part of the mix, the tug of war going on in the NASDAQ. It has already broken out and is consolidating. So we might see a little bit of a retracement in any of these, but maybe more so in the NASDAQ. Again, Russell peaked, broke out, peaked, got rejected. Now it's consolidating pretty flat. So it's got a small range. So again, some further consolidation wouldn't be surprising. All the foreign indices rebounded very similarly. So the Nikkei, the Europe's looks like it's testing its previous high. DAX, again, very similarly, exuberant run, got a previous high, possible, retracement rejection from there. See the dramatic, decrease in the VIX down from 20, above 20 down to below 14. Again, we see, oil's now pretty much range bound between 70 and 80. It dropped down to near 70, then back up over 75. So again, we'll see some oscillation probably between 70 and 80 unless we get some global news which causes a change in that trajectory. Again, natural gas was, testing above the 320 level and then broke down below 3. It looks like it's wanting to regain that 3. So that 3 looks like a pretty stable area. And we tend to see these, loop back up. So again, the longer term trend is up and it has these, volatile swings. Again, we'll look at the ETFs for oil, natural gas, etc. in a minute. Again, we saw gold testing the 2000 level. So it's, range bound between 1950 and 2000. I expect we'll see some further tests of 2000 before we get a breakout. But again, with the weaker dollar, it's positive for all the dollar denominated commodities and particularly silver, gold. The trend is up. Again, silver trying to retest, trying to break 24. So again, it's got to, test and break 24, great support there to surge higher to retest that 25 high. So again, more upside in potential in silver. And again, we'll talk about some of the ETFs to swing, short-term trade these commodities in a minute. Palladium had a nice, finally got a bottom and bounced. Platinum, similarly, copper. We've been watching, corn and wheat. So corn looks like it's downtrending right now. Wheat's, looks like it's forming a bottom. We'll talk in more detail tomorrow. We are long wheat again using the WEAT ETF. And again, we saw that, exuberant run up in the treasury prices, decrease in the yields. Looks like, now they're forming a top, consolidating, so it wouldn't be surprising. And again, we've talked that, I wouldn't be surprised to see the yields at some point pop back up to 5%. Again, that'll match the Fed interest rate. a lot of what they're paying for interest on money markets, etc. So I wouldn't be surprised to see a quick retracement in the bond prices and then a longer term trend back up as people are pricing in a Fed interest rate cut in 24, or actually numerous cuts in 24, which I think is a little bit exaggerated in my humble opinion. Again, we saw the dollar, broke back down. Now it's sitting around 104. Just right now it's below 104. And this surge in all the foreign currencies looks like, again, yen finally got a bottom. There was some speculation whether the Japanese had intervened to hold the value of the yen, but it looks like it did get a bottom and then got a pop, as did all the other foreign currencies on the decline in the dollar. So, okay, let me grab a quick drink and we'll look at our ETFs. So if I know people have mentioned several categories, we'll take a look at those. And then if you have any other categories you'd specifically like to look at, particular ETFs, we can talk about those. I want to share with you some updates from this week of some of our BeachBum traders have shared with us. So I'll grab a drink and I'll be back in a sec. Just a quick reminder, if you'd like to get 24/7 access to this ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet, you can get 24/7 access to these Google Sheets by joining our Patreon at the All Access or VIP level. And as you'll see, as we identify a potential opportunity, then we typically jump over to the ETF Google Sheet to see if there's some ETFs, whether it be a long, a short. We'll see if we have an ETF that we could play that strategy in our Google Sheet. So just some updates from this week that we'll see in our ETF Google Sheet with the run up in retail and then some of the disappointing earnings like in Walmart, etc. We are looking for a way to short the retail sector, again, very short term. As we've talked for several weeks, the long-term seasonal trend is positive for retail. But again, if you're looking for a short-term opportunity on bad earnings, etc., if we had got weaker retail sales data, we're looking for a way to short the retail sector. So we found this EMTY ETF, which is a short that focuses on brick and mortar stores. So we'll take a quick look at that one in a second. Also, the Crow pointed out to us this TECS, which is a short on the technology sector. A while back, we talked about TECL, which is the inverse. That's the positive bull version. So we've added TECS, which is a bear on the technology sector, and we want to look a little bit more detail. In the past, we've used FANG U and FANG D to long and short the FANG stocks, and it looks like this is a little bit different. The components are a little bit different and may be a better opportunity for a broader longing or shorting of the technology sector. So thank you again, the Crow, for pointing out TECS to us. Also, the Crow pointed out a new leveraged inverse ETF on Tesla. So if you want to short Tesla, In the past, we only had a 1x version of an ETF, and so we did the research on this TSLZ, and we'll quickly show you the research, the risk-reward profiles for that TSLZ. So first I want to look at this TECS and TECL in a little more detail versus FANG-U and FANG-D. So if we look at this TECS and TECL, they're now in our Google Sheet under Technology. So you can see 3X Bull, 3X Bear. You can see the risk-reward profiles of TECS. You can see it's pretty close to its 52-week low, which is its bottom. Actually, we'll talk about TECS, the entry point, in more detail tomorrow. But I would use the top in TECL, which has got a little bit of room to determine an entry point in TECS. I wanted to look at the actual components of TECL, which are going to be the same as for TECS. So you can see in the notes section, you can find the link to the ETF database profile for any of these ETFs. So the definition, etc. Another thing that's interesting is this is market cap weighted. And what I want to do is I want to compare that to FANG-U. So we've been in the past, we've used FANG-U and FANG-D to long or short the mega cap techs, the FANG stocks. So I want to compare TECL and TECS to the FANG-U. So another point is this strategy is equal weighted. So FANG-U is equal weighted. TECS is market cap weighted. And if we look at their actual holdings, this is a little broader. You can see it's heavy in Microsoft, Apple, NVIDIA, but it also has things like Broadcom, Adobe, Salesforce, Oracle, even like IBM and Qualcomm. Whereas the FANG-U, if we look at the holdings, it has Tesla, Apple, Facebook, Google, Baba, Amazon, Baidu. So it's got, some Chinese exposure. I do not know why it still is showing a holding in Twitter. But as you can see, it's current as of November 16th. They're showing a holding in Twitter. I don't know why that is. So again, these have slightly different weighting, slightly different composition. So I think it's interesting whether you're trying to short specifically like the Magnificent Seven, the FANG stocks, long or short. That would be FANG-U, FANG-D. Whereas, again, a little bit broader technology sector, I think the TECS, TECL pair might be more interesting. So again, I think it's important to understand the weightings and the composition, the holdings, to determine which of those pairs is better for trading, long or short the technology sector with some leverage. Again, these are all 3x leveraged ETFs, so they're meant for more shorter term trading. But again, we'll talk in more detail. We're going to be looking for opportunities. If we get an exuberant run in technology, at this point, I'm a little bit. I find TECS more attractive in the broader holding and less risk versus the Magnificent Seven, just the FANG holdings, because I think people are going to continue to pour into those Magnificent Seven FANG stocks, particularly towards the end of the year. And we've talked about that to some degree. Okay, let's look at some other categories. So I think Alan or someone was asking about ETFs for crypto, and we do have a number of ETFs in here that you can trade long or short on crypto. You can see Bitcoin. We've got BITI, to short, BITO to long. Also got cryptocurrency in general, so BITQ, block. We're currently long block, so a couple existing ETFs that you can trade that are focused on cryptocurrency and Bitcoin, even though they haven't approved a spot Bitcoin ETF yet or a spot Ethereum, though we already have ways we can trade those, and you can see the constituents of those. Talked about China. You can trade China with yen long, yang short. Again, good short-term, as the crow pointed out, good short-term day trading, scalping opportunities. Some people prefer KWEB or some of these other China-focused ETFs. Talked about oil, natural gas. Talked about gold. So again, we have a number of different opportunities. Our preferred long is GDXU. For gold, silver is AGQ. We have some on miners, so you can see the different opportunities to long or short gold. Again, with the volatility, there's been recent short-term opportunities there. Natural gas, as we pointed out, long boil, short cold. You can also play UNG or UNL. Oil, couple opportunities. You can long with Gush or UCO, short with drip or SCO. So I saw Easy Mike was talking about boil and cold and UCO and SCO. And again, you can long with Gush or drip, short with drip. Talked about real estate long with DRV, short or long with DRN, short with DRV. We talked about retail. We just added, again, this EMTY to short with retail. So again, you can see the risk reward profile of EMTY to short. So again, it's not, I don't think it's really leveraged. Yeah, it's just a 1x short. So you can see it hit a recent high and now declining as retail in general has been uptrending. So again, now we have a way to short retail. Again, it's focused on brick and mortar, so you're going to want to look at the constituents, how it's defined, etc. In addition to RETL to long retail, you also can long with clicks or ONLN. Clicks is long online short brick and mortar, and then ONLN is just generally long online retail. Again, we talk about silver, long with AGQ, short with ZSL. Also, we talked about wheat, talked about treasuries, the volatility in treasuries. So, long TMF, short TBT or TMV. And then again, we have additional ETFs with different durations on treasuries. Talked about the trend in utilities. Also, we talked about wheat. We're currently now long again wheat. You can see the risk reward profile on WAT. Also, we've been watching this. This is long on the yen. So we see the yen recently bottomed, has a very short-term attractive risk reward. So if you want a short-term trade, that bounce in the yen, here's an ETF you can use to trade that short-term long, short, long with YCL, short with YCS. I want to quickly look at the technology components. Again, you can find this screener in the screeners tab on our Google Sheet. It looks at the various components. Again, we've used FANG-U in the past for the FANG components, the mega cap tech. Saw that exuberant run up. Again, it looks like it's consolidating. It does have some room to run up. Again, I expect probably get a gap fill, a retracement at some point, profit taking, but then, probably a resurgence towards the end of the year because all your fund managers, etc., are going to want to show they've got the Magnificent Seven in their portfolio at the end of the year. Biotech, again, it's been much weaker, but you see it's bouncing in its downwardly trending channel. Did break out a little bit. Again, very short-term volatility. So you can trade that with Lab U long, Lab D short. Again, semiconductors, SOXL or SOXS short. Again, breakout, exuberant run up. NVIDIA is probably going to cause an additional resurgence. I don't expect NVIDIA to disappoint. I expect them to, have some pretty positive guidance, etc. somehow. If they did disappoint, again, you'd see a dramatic negative reaction in the semiconductor sector. But I expect a short-term pop-up, and then again, we would expect a retracement, possibly a gap fill. So you can long semiconductors, SOXL, short SOXS. We also have some others in our Google sheet you can use to long or short semiconductors. And again, the overall NASDAQ, very similar. It's again, you can see how that's very much heavily weighted by the FANGs, the Magnificent Seven. It's very similar behavior. Again, you can long the NASDAQ with TQQQ, short it was SQQQ. But again, I think focusing on particular sectors is probably going to be better, more opportunistic at this point. Okay, I also wanted to look at that new Tesla one that the Crow pointed out. So again, this TSLZ is a 2x inverse, so a 2x short on Tesla. So you can, in the research tab, at the bottom of the research tab, I'll eventually sort this so it'll show up in the Tesla category. But again, you can see the risk reward profile. If we look at the Finviz chart for this TSLZ, see this is a very new ETF. So if you want a short-term trade and short Tesla, this may be something that you might want to consider because it's got the 2x leverage. The other ETFs we have are only 1x leverage. So again, using an ETF, you don't have to worry about borrow costs, etc. With shorting a stock. Also in a retirement account, you generally can't short an individual stock. So, and another example, and we have the NVIDIA ones in our Google sheet as well, as Easy Mike's pointing out another example. This is NVDS. So again, you can see the risk reward profile from that one in our Google sheet. Again, this is relatively new. So you can see the volatility, but again, if you're a very short-term trader and you want to short Tesla, there's also a TSLL, I believe it is. So we have another one. We've got a couple other Tesla shorts, but again, they're not leveraged. And then we've got a 1.5 leveraged bull on Tesla TSLL, which is corresponding to this TSLZ. So again, thank you, the Crow. Again, I'd like to see longer history in this, and none of these are showing our 2-to-1 risk reward profile yet. So I've just left it in the research tab. These will update with the prices on a near real-time basis, so you can see it there. And again, we'll keep an eye on that, see how it performs, see if it gets in the inflows required to survive that ETF. Okay, so if anybody else has another ETF I missed that you want to look at, you can throw that back up in the chat. Otherwise, I want to get to our strategies very quickly. We'll go through that very quickly. So again, our theme for this week is make money trading during Thanksgiving week. And we've talked about this in before, so you can hear some of our previous strategies in this previous video, how to make money trading during Thanksgiving week. I'll reiterate some of those things. Also, I want to again thank our BeachBum trading community, everyone who's joined, participated over the past week or year. And in particular, I want to thank our Patreon supporters. We greatly appreciate all of your support through this week. You can hear all of those, what we're thankful for to make money trading, why we're thankful to have the opportunity to be able to make money trading, and we hope that you are as well. And we'd love to hear, what are you thankful for about trading? And you can again hear that and see our Happy Thanksgiving meme from our BeachBum Trading family in that previous video. So again, just to reiterate some things about Thanksgiving week is, a lot of people probably have already left on vacation or will be leaving on vacation. So we expect, a low volatility week. We saw the economic data is kind of clustered on Wednesday. A lot of people will probably leave right after that. So expect, lower volumes that may cause some, jerky volatility, some less liquidity, larger spreads, etc., as people are going to be, slowly leaving for the holiday. Also in this video, we have some recommendations, when the trading's a little bit slow, what can you do to help make money trading going forward. So again, we'd highly recommend you listen to those. And I'll probably release another short video that reiterates some of those things that we do when the trading's slow during holiday weeks, etc. So also, we've been talking about, strategies for making money trading in November. So you can hear those in the videos via the links in our notes or on our BeachBum Trading YouTube channel. Also in the fall. So again, we've been talking about the seasonality for November, for the fall in general. Again, specifics for Thanksgiving week. Talked about sector rotations. Tomorrow we'll talk about our dividend paying stocks and also our option strategies that we use to generate income while we're waiting for our additional swing trading setups to manifest themselves. So if anybody has any last minute questions, or again, if I missed your ETF and you'd like to look at another ETF in the Google Sheet, I can do that. Otherwise, if you have questions after the fact, you can put them in the comments to this video. You can also put them in our Discord. There's our Discord's free to join. You can find an invite to our free Discord in the description box below. We encourage you all to join our Discord and let's continue these conversations, 24/7. Also, we'd love to hear your recommendations for improving our weekly trading game plan videos, our other video content, any of our automated systems, our Google Sheets, our overall community. Let us know how can we add more value for all of our fellow BeachBum traders. And tomorrow we'll take all of this data and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, our shopping list. We'll talk about additional trade ideas, strategies, etc., to make money trading during Thanksgiving week. So again, we hope everyone will come back again tomorrow for part 2 of our weekly trading game plan for Thanksgiving week, November 20th through 24th. And again, if you have any other further questions or comments, please put them in the comments to this video in our Discord, or you can also always contact us via our social media sites, and you can find links to our social media sites in the links section on our homepage, which is beachbumtrading.com, bum without the U. So again, plenty of ways we can continue these conversations. And again, we hope to see you all back here tomorrow, 10 a.m. Eastern Time, for part 2 of our weekly trading game plan for Thanksgiving week. Thank you again to everyone that participated in the live chat. Glad to see you all. I don't see any of you again before Thanksgiving, we want to wish you all a very happy Thanksgiving from everyone here at the Beach Bum Trading family. So we hope to see you, but if not, again, happy Thanksgiving to our fellow Beach Bum traders and have a great day.